Hello and welcome to April 29th. Alpha's T at 42%. What a horse race. Yesterday or a couple of days ago was Capri. Then it was KR last week, and now it's T. And T, we're at Capri. Let's go to T. Here at T. All right. So here at T, we are already in the last bar. We are in the 60-day rule. We are 60 days less than the date to expiration, and therefore we initiate the fifth rule of the exits, which is right here, dipper low. We did the dipper low yesterday. Even though it's closing in on the third ratio, it's already initiated the dipper low exit because we are less than 60 days away from expiration. Okay, that said, we are now going on to Capri. So Capri did not reach its third ratio as of yet. Nope, right there is 57, and it's running here at the close was today at 55.37. So we are still $2 short, $2 and something away. The 224. So it has about 2 days to get there. So and I guess it's August. So what will happen on that 60-day rule will be is that we reach, if this does not exit by June, middle June. Let's see the expiration date's right over here. Expiration is 20 August. That's what that stands for. 20 August, the year 2021. So if we are not out of this trade by the 20th of June, we go to dipper low. If we are not out of the trade by the time we reach the 30 days or less, which would be July 20th, then we will go to last bar low and get out of this trade as best as possible. To remember the rules of engagement. Number 1, protect capital. Number 2, protect profit. Number 3, take profit. Number 4, exits do not retreat. And number 5, rinse and repeat. So those are the rules of engagement, and that's what we'll be looking forward to. Capri and T, if you noticed earlier, have very large O's. So these guys are going to be playing in and out for a while until we're able to get to the building. The buying power gets big enough to be able to get more contracts to be able to retire them to the winner circle. That's what the winner circle, what I mentioned in the past, the winner circle is anyone who pay back all their owed and retired off the field. And some of those O's at the last trade before their exit sometimes produces some pretty good profits. It makes a contribution back to the buying power. Remember that if we get out at break even or better, we're getting back our trading money, which is rule number 1, protect capital. Going on now to CVS. Here at CVS, we have now here at CVS is our situation here at CVS, and there's a third ratios right there. You can see it's $80, and we closed at 76.37. So we are still $3.70 approximately out, and $1.15 is the ATR. So we're still 3 and 4 days away, providing it's in a perfect trading world. Nothing is perfect in trading. The one that I'm really a little bit jazzed about is ATVI, not because of the stock itself and not because of its performance, but because it gives us a little counterbalance of having a nice diversified portfolio of that. We have some puts into our calls. We try to we depend on the scanner to return our opportunity, but unfortunately, sometimes it gives us. I remember I even mentioned in my past videos, I was a little bit concerned about having way too many calls, but in the end of the day, we're in positive territory, and as you can see from our opening slide, we are 18.4 versus the SPY's 11.9. So we are still beating the market. The thing would be is beating the mutual fund that I featured yesterday, PRWAX. and PRWAX is 17.95 per year for 10 years running. So that's our nemesis. That said, going on now to Raytheon, which is in positive territory. And something interesting to point out about Raytheon here is that we are at 17%, and we are just shy of our third ratio. The third ratio is 34.19, and we closed today at 82.87. So we are $1.20. So it's about $1.40 or $1.50, something like that, to get to that third ratio. Okay. Today I had an interesting class also with my headmaster, Courtney Smith. He ran a 1-hour seminar on stochastics. And so we are going to do adjustments on stochastics going into May. One of the adjustments is going to be that in stochastics, in the presentation, he stated that the actual better K is 20. Yep, it was 20, and the D is 3, which I don't use, but that's the point. Also, too, this is exponential. Now we have a situation here that we're going to have to eliminate this and reload this. So this is going to be a good lesson, how to add indicators to your chart. First of all, we're going to remove this one because we are going to change the stochastics to what was discovered this morning in this morning's class, and that is we're going to add Stochastics Slow, which caught me a little bit by surprise, but Courtney Smith is the headmaster, and my has very respected following and teacher. So there is Stochastic Slow. Also, too, I like to move the stochastics to the top because this is stochastic steerage. So this is how you would move it up till you get it to where you want it. And then these guys here, drag this down, drag these guys down here. So everybody bumps everybody else down into the next quadrant, and there you are. Boom. Now we'll come over here to our gear shift, and we're going to change it to the 20, and then change this to the 3. And he didn't mention anything about the average, the exponential, but he didn't mention it was simple or exponential. He just mentioned it was a slow. So I'm going to go with exponential. I like that better from my past experience, because of the reason is that exponential means that it applies the value of the current value much more importance than in the past, and that's what we're looking for. All right, coming down here now, we have here the K. I like the K to be blue. That's my preference. The D is red. My overbought line is blue. We'll leave it green. Oversold, green, fine. The signals. This is what's important, is the breakout signals. I like, these are those arrows that you see on the screen. And there's the arrows, and I also like the weight 5 and the arrows. And I like the up signal for green, and for the down signal, it's going to be red and 5. And then you hit OK, and then apply. OK, and there it is, our new stochastics for the slow for the coming May. And I'll be adjusting the scanner and other things to meet the criteria. And with that said, we're going to conclude today's report with losers become winners, alphas T 42%, and we're still beating the market with 1118.4 to 11.9. And I thank you for stopping by.